Hello and welcome to Info House, the place to go for info on hot topics around the world. Today, we want to talk to you about one of the most hot button questions that people are dying to find the answer for: how to get a mortgage in the UK, even with bad credit or student debt. Let's look into the details. Getting on the property ladder is much easier if you know where to find a mortgage, how to apply, and what to do to improve your chances of success. It can be daunting applying for a mortgage. There are a lot of forms to fill in and a lot of information to provide. But with some simple planning and a bit of organisation, it need not be stressful. Here is everything you need about getting a mortgage and buying your first home. How to get your first mortgage. Okay, you've found a home you want to buy. Congrats! Now, there are some things you will need to do before you start the mortgage application process. Save a deposit, which is the amount you put towards buying your home yourself. Make sure you can afford a mortgage. Look into the schemes that help first-time buyers. Decide what type of mortgage is right for you. And shop around to get the best deal. Should you get a mortgage? A mortgage is essentially a very large loan. It is a huge commitment, so you need to make sure you are prepared for the expenses involved. There are plenty of mortgage calculators online where you can put your income, outgoings, and all the other variables to give you some idea of how much you can borrow. Ultimately, if you can afford a mortgage, it does make better financial sense than renting. Make sure that you've factored in the following costs: the deposit, the monthly repayment on the mortgage, fees that come with getting a mortgage, homeowner bills like energy, broadband and council tax, and emergency savings. Have a rainy day fund of 3 to 6 months' worth of basic household expenses and mortgage repayments. How much do you need for a first mortgage deposit? A smaller deposit makes you a riskier bet. Mortgage companies use a loan-to-value LTV calculation to decide whether to lend and at what rate. You can get first-time buyer mortgages with an LTV of up to 95%. There are fewer mortgages available for high LTVs, and the deals usually have higher interest rates and upfront fees. The bigger your deposit, the more choice you'll have, and the less interest you'll pay. You'll find getting a mortgage easier. Can I get a mortgage with bad credit? Yes, you can. Naturally, bad credit can make some lenders hesitant about loaning large amounts. However, lots of lenders have mortgage criteria that allow for a less than perfect credit history and are more open and accepting of applicants with poor credit or a low credit score. These types of mortgage agreements carry more risk to the lender, so the lenders that accept bad credit can charge higher levels of interest. That can make your mortgage more expensive, but some people who take these mortgages do so with the aim of switching to a cheaper deal in the future with a remortgage, once their credit score and report has improved. Does a student loan impact a mortgage application? Yes, but not exactly as you might expect. Although student loans are technically a debt, they aren't treated the same as other debts when it comes to your credit file. But that doesn't mean they aren't relevant. The monthly payment on your student debt is used by lenders as part of their affordability checks. In very simple terms, the more you pay every month on your student loan, the less you may be able to borrow. Many other factors will come into play, however, and student loans are a very common form of debt, so lenders will be understanding. So there you have it, folks. You've been watching Info House. Thank you for watching, and please remember to like and subscribe to our channel for more useful information on hot topics around the world. Please check out the description below for links to even more useful information.